Welcome back everybody to another video. This time we're going to be talking about trading sessions. Now, what are trading sessions? Well, trading sessions, are different times throughout the day where different people around the world are actively trading the market. Now, these people, tend to be, the institutions, the banks, it tends to be the time when, the banks open, the stock market opens, all these different things, and there'll be a different time for that depending on where you are around the world. For example, we're looking here at the London session and we're looking at the New York session. So it will represent, when London is most active, and it will represent when New York is most active, because these are both major areas, that are responsible for a majority of the movement, in the Forex market. So what times are these actual markets open for, and what times do we like to really focus on when looking at the Forex market? Well, if we were looking at the whole of the London session, obviously it will last throughout the day, and it tends to start at 8 AM. So 8 AM would be considered London open. And the London session will go on throughout the day, till usually about 4 PM. And then you then have New York session, which tends to be from about 1 PM. This is GMT time, so 1 PM, and then it will continue to about 10 PM, where the market just briefly closes. So of course, when I said that, there is going to be that kind of crossover between London and New York, because like I said, London's 8 till 4 and New York is considered to be 1 to about 10 PM GMT. So there's also going to be that crossover time where both of them are also quite active in the markets. Now, what I like to focus on, is sort of the first few hours of London session, and then also the first few hours of New York session. Now, this tends to be, where the most of the movements actually happen in the market, and you'll tend to see the most volatility in the market, and the most money being presented to us, in buy and sell positions at these particular times. Now, why is that? Well, obviously, at the open of the market, it tends to be the most active. Everyone's, able to actually trade, and, but because of obviously the stock market being open, people being in the banks and the institutions, everything's just happening. So when you first, get to that time, what you'll then see, is all this influx of buy and sell positions, and that is then what causes the momentum to come into the market. So what I like to do, is I like to break down the London session, into a 3-hour block from 8 till about 11. And then what I like to do, is I like to break the New York session from about 1, and we can trade that till about 4 PM. So this way we've then got a nice range, 8 o'clock till about, like I said, 11, and then we've got 1 o'clock, till about 4. So we're going to go through the chart in a minute, and we're just going to talk through the type of price action that we're actually seeing at these areas, during these times. Is it impulsive? Is it corrective? There's kind of phases of the market that we're actually seeing, and then obviously the best way that we can actually utilize these times, to be able to predict the the actual movements in price, and of course it's another additional confluence that we can use if everything else is aligning for us as we actually enter this particular time. Now, another thing that I like to talk about, is the Asian range. Now, the Asian range, is the time during the night where the Asian market is open, and what I've got marked up on the screen, is from 12 AM to about 6 AM. Now, this time, would be considered the Asia range, and what it's good for, is it's a great tool to use as a form of liquidity. Now, as we know already, liquidity are areas in which there are resting orders and prices are likely to sweep above or below these Asia ranges, and it can cause an influx of orders to come into the market in the opposite direction to whichever way that it sweeps. So that's why the Asia range is a really good tool to have on. You normally see quite a reduced momentum during the Asia range, sometimes you see quite consolidating price action. You don't always see the best impulses, and by looking at the Asia ranges, what you'll see is that it tends to be, at the end of the impulse, or it will be, like I said, in some kind of correction. So that's the best way to trade the Asia ranges. Use them as some form of liquidity, and then just focus on the London and New York sessions, okay, as the additional confluence if you're going to be framing up any kind of trade idea whatsoever.
The best time to take action is now. What are you waiting for? Tired of struggling with market direction? Want buy and sell indications at a click of a button? Who wouldn't? Check out TradeDork's buy and sell indicator today at TradeDork.com.
So now we understand, okay, what the sessions actually are, okay, and the sort of times that we like to use them. Let's have a look at the price action, okay, responsible during these times. So let's just start, okay, on this most recent day here. Now, if I was just going to ask you where the momentum in the market is, okay, and which phase of the market we're currently in, okay, what would you say? Well, by looking at this, we've got this clear impulsive leg in here, okay. You can then see that we had this really nice, correction in here. We had this slight expanding pattern, okay. So we've got this kind of like expanding pattern in here, okay. Impulse, correction, impulse, okay. 1, 2, 3 touches, okay. A nice high test candle coming into, guess what, New York session. So New York session, okay, has caused the impulse on the second half of the move, okay, and in the first half of the move, okay, you can see that the first impulse was within London session. So already, okay, momentum, correction in between, momentum. So it's an additional confluence to predict the chances that there's going to be momentum happening during these hours of about 1, okay, till about 4 p.m, okay, because of course at this point in time, both of the London and New York are both actively trading during this time, okay, so it's going to increase the amount of momentum and volatility in the market. So that's just a clear example, okay, and to add to that, we can also see here that we have the Asia range. Now, with the Asia range, like I said, we use it as a form of liquidity. And if you have a look at the top of the Asia range. Well, this is identified as the top of the Asia range, and as you can see, we actually swept both below the Asia range, and then we swept above the Asia range, okay, before the next impulse to the downside. So that's a clear indication that what we've done, okay, is we've completed everything that I've just explained. We built the liquidity during Asia, okay. We then swept it at the start of London. We impulsed during London session. We corrected in between the two, and then we impulsed during New York session. And that is how the market moves. It grabs liquidity, it pushes down, it corrects, it pushes down. Okay? So that's a clear example of how these timing and these sessions, okay, can actually come into play by looking at a clear example just as that, okay? And that's just the most recent day. So if we go back a day, let's have a look and see what happened here. So again, where is the majority of the momentum? So again, you can see that the majority of the momentum, okay, is during here, okay, which you could say is during New York session, okay, and we've got this kind of down leg in here of momentum during London session. Now, obviously, yes, okay, there is a little bit of momentum in between the two, but of course, like I said, these sessions aren't always going to be, the perfect times where you're going to see all the momentum and nothing else in between, okay, it's just an indication of where there should be a heightened level of momentum in the market. So here you can see that what we did was we swept that Asia range, okay, because again, this is the Asia range, that's the high of the Asia range, so what did we do, okay, nice high test wicks above that, okay, and then a nice push to the downside. And then what did we do? We came, okay, and guess what, we swept the low of the Asia range in here, and then we started a move back to the upside. So again, okay, it's showing us a clear, liquidity sweep, it's showing us clear momentum. All we have to be able to do is identify what phase we're in, and what's actually going on, okay? You could see even in here that we have, some kind of break of this structure in here, okay? So then straight away we've got a break and retest, okay? Price coming back into this area in here, okay? Before price then continues and pushes up higher. So let's go to the next day. So here you can see that we have more of a consolidating London session. So here, okay, it's not as good, okay, because it's lots of, liquidity being generated in this area here. Yes, we do get, a nice move to the downside here. However, like I said, just not always going to work perfectly. and it's just an additional confluence if you happen to have everything else aligned, that you can say to yourself, you know what, we've also got, you know, New York session opening right into my entry. Okay, lovely pair of tweezer tops. Okay, just in here you can see beautiful set of wicks. Okay, and then a nice push to the downside. So if you look on the day before, you can see how, you know, yes, we are, you know, clearly moving to the downside, and you can see, yes, okay, we've got this nice bearish momentum coming in here, pushing lower and lower and lower. Okay, again, more opportunities, potential break and retest. Okay, and it's all about just trying to tie it in with a certain time zone. So here you can see the Asia range. Okay, yes, we swept it, but we didn't break above. Okay, and this does happen sometimes. So like I said, the Asia range isn't always going to work, and sometimes it just depends on what kind of phase of the market we're in. Okay, and what else is actually being presented to us. So again, in this situation here, you can see how we just break above the Asia range, and then we get a nice impulsive move, okay, to the upside. In here we do start to become quite ascending, but then we just break straight out of that and continue to push higher. Okay, we then snap back down, but again, the main momentum in the market, okay, is seen during these trading hours, and it's all the time. Okay, you can see it again. Okay, let's highlight some in here, okay, here, right, we've got corrective momentum, impulsive momentum. Okay, so from 1 o'clock momentum. Okay, same thing again here. Where's the momentum? Okay, all the time during these sessions. London opens, momentum. New York, momentum. And sometimes as well, what you do tend to see, okay, is a continuation of the same trending momentum. So what do I mean by that? What I mean is, whatever tends to happen in London, okay, is you'll tend to get a continuation of that in New York session. Now this doesn't always happen, but when you get a trending market, that is exactly what you tend to see. What will happen is, okay, during these first 3 hours, roughly, what you'll do is you'll get the first impulsive move down. Then you'll see here we start the pullback. We pull back, okay, until we reach something significant, and then we then see the next impulsive leg during the afternoon. Okay, and it's exactly the same thing here. Okay, what did we have? We had the impulse during the morning. Okay, between the gap, we had the pullback, and then we had a continuation, okay, of that momentum in the afternoon. And that's just how it works. Okay, so what you tend to see is that, you know, whatever happens in the morning tends to happen in the afternoon. Some of the time, not all the time. Okay, this is an example where, you know, you can see that we have a really choppy London. Price pushes down, then it just goes up and completely reverses. So, you know, that's not always the case. But again, momentum, you know, during these times. Okay, now like I said, these times can, you know, you can change them if you really want to, depending on what you kind of test and see that works best for you. But these tend to be the best and strongest hours for me, because, you know, like I said, this is when, you know, the London opens, New York opens. You have that little crossover section as well, where both you know, areas are trading, and, you know, so you're most likely to get the best kind of results by doing that. Again, you can see a sweep of the Asia session, break lower. So that's just the Asia session playing out again. Okay, beautiful. Okay, that's obviously a new spike in there. In here, what do we have? We've got, you know, impulses, pullbacks, impulses, pullbacks, impulses. Okay, clear move to the upside. Okay, momentum. Okay, in here, correction. And then quite a corrective afternoon. So, you know, it will tend to change. But, you know, that's the general overall point, you know. And if you're able to trade, you know, some kind of, like I said, some kind of trade idea during these times, it gives you a great additional confluence, okay, that the market is actually going to be, you know, going in your direction, okay, exactly like it did on this day, okay, where we have the trade idea and it also ties in with the session, okay. And that's why it's really important to actually be able to use it, okay. And it's also really good to be able to know when to be in and out of the market. Of course, you know, we like to be in the market as much as possible, but it's also good to be able to be out of the market, okay? Being out of the market is just as good as being in the market, okay? Because of course, being in the market involves risk, and what we like to do is be able to protect our capital at all times, okay, and make sure that we are not over risking and not overusing the markets, okay, because then you're going to end up over trading, and that's just going to end into a cycle of, you know, losses, and then that's just going to be really bad for you psychologically. So of course we want to make sure that we're getting involved when necessary. So that's a great reason why we like to use them, okay? Make sure it allows us to stay out of the market, enter at the right times. Of course you can trade the whole day if you really want to, okay, that's no problem at all. But if you pick your moments, okay, and then find your setups and try and tie it in with an area where you know there's going to be momentum, it's going to give you the best chances of success. So what I would recommend you guys all do is go and test this for yourselves. Have a little look around at the different time zones, okay? Check out the Asia range. Look at the types of reactions that we get, okay, when we sweep above and below the Asia range. What happens next, okay? Study it. And then look at these sessions, look at the momentum, okay? Identify our phases, impulse, correction, impulse, okay? It's always important to know what phase of the market we're in to be able to work out whether we're looking for that continuation, whether we're looking for that reversal, okay? Or whether we're looking for that impulse, okay? Very, very important to better work out what phase of the market you're in, and by using these sessions, okay, it could be a great way to benefit you when figuring that all out. So I hope you can take something away from this video, okay, and I will catch you all in the next one where we're going to be looking at divergence, so you don't want to miss that, and I will see you all there.
Be a dork.